Hello guys, welcome to this channel. Today we're going to be doing a masterclass on account and risk management. If you're looking to learn how to properly manage multiple six-figure in futures prop firm funded account, or even looking to get there, right, consistently, and then actually building a foundation for yourself, this is the right masterclass. I'm going to be talking about a plan, a game plan on how to get to potentially six-figure and even multiple six-figure. You can use these plans for whichever route that you guys want to go into. I'm going to talk about also how to properly risk, in scaling and building a funded account and building a foundation. I truly believe if you implement the plan in this masterclass, you will have somewhat of a blueprint of a North Star on how to properly manage funded account in the future space. This is specifically, I repeat again, to the future space. Now, you can take some of these principle, rules, concept, you name it, and apply to Forex and other commodity. That's, up to you, but this is specifically for futures because that's the market that I typically trade. So without any further delay, let's go ahead and get into the masterclass. So first thing I want to touch on is capital preservation. It seems a bit counterintuitive going from talking about managing and growing and now I'm talking about capital preservation. Well, I want to touch upon this because this is a principle or this is a concept that I felt if I had learned this early on, I probably would have been further. I truly believe most traders issue fall into three categories, right? Either scarcity mindset, undercapitalization, or capital management. When it comes down to scarcity mindset, why is that a major issue? Is because most traders would try to get one or two account funded, and they would try to make the most amount of money with those account, or typically with that account if they only have one. The issue is that it leaves you vulnerable to a scarcity mindset. And when trading, one of the best things that you can do for yourself is building or cultivating an abundance mindset. And you cannot do this by just talking and saying affirmation. You actually have to put action behind it. You actually have to have an environment that you're building that can cultivate that type of mindset. So that's what, for me, one of the main things I always talk about, at least in the network that I'm in, is building a foundation of multiple six-figure funded account, ultimately seven-figure account that you have under your belt. This would translate in about 7, 10, maybe 15 accounts that you have all together that you're managing. See, now, if you have 15 accounts that you're managing and that you're trading all together, you can afford to risk much lesser. Instead of risking $500, $700 per trade, if you only have one or two accounts, you can actually afford to risk $100 per trade if you have 10 accounts, for example, because you don't need to risk a lot to make a lot, right? $150 with 10 accounts, if you win, you have a risk of what, 1 to 2, can get you 3K, right? In one trade, $150 times 2 for risk of reward 1 to 2 easily get you $300 times 10. That's 3K. So if you have multiple accounts, you can afford to risk less, right? Another reason is undercapitalization, right? Kind of touching on to the same thing I talked about earlier. If you don't have enough capital, it causes you to feel scarcity mindset. It causes you to have scarcity mindset, not to have scarcity mindset. Undercapitalization also, why it's important to really emphasize on the growth of your capital rather than focusing solely on your daily, weekly, monthly percentage gain. This actually can provide you a sustainable and abundant mindset, right? That allow you for a lower profit target, which we talked about earlier. Life-changing income does not come from risking huge amount on one account or two account. Life-changing income in trading, from what I have learned, especially when managing futures or prop firm account or just in general prop firm account, come from managing multitude of account, right, altogether. And lastly, but not least, after acquiring multiple accounts, it is essential to minimize the exposure of your entire portfolio to trading risk. So that's one of the way that you guys can manage your account. You can split all your account portfolio. If you have 20, you can split it into two sections. You can have 10 account here and 10 account there that you're trading. 10 account, you trade in one way, and then another 10 account, you trade in another way. Maybe this 10 account, you increase the risk maybe a little bit more. And another set of 10 account, you can decrease the risk, and it's a conservative account. Maybe that's more like you're saving, and then this other 10 account is maybe like your normal income where you're trying to generate as much as possible. And, you're just aggressively growing those accounts and getting payout from those. So that's essentially the introduction for this. Now, I want to bring something to your attention. This can be a little bit of a paradigm shift. And by the way, this drawdown and profit target can differ based on the prop firm that you are working with. But essentially, those targets are essentially similar, the same across most prop firms. They're not too far off. So please bear with me. If you have a 50K account, right? If you have a 50K account and on a 50K account, you're typically going to have a drawdown of about $2,500. In some prop firm, you're going to have $2,000 drawdown, right? Nevertheless, not too far off, with a profit target of about $3,000, right? Everything fine there, right? Now, the cost it's typically going to be $50 to $90 on a high end for a 50K account. I want you to remember this is going to be our first section here, right? I want you to pay attention to this one, right? So that's for number one. Now, for a 150K account, we have a drawdown of $4,500, and we have a profit target of $9,000. And then the cost is typically 150 to 225. So about 2.5 more than here. So the cost is about 2.5, right? 2.5 the cost. The target is about 3 times more. And then, however, look at this. The drawdown is not 3 times more, right? It's about half, just slightly more than half, to be honest. Somewhere around there, right? 60%, give or take, right? So why am I showing you this? I want you to realize this. Most prop firm, if you are looking at 150K, which is typically somewhere near the highest amount, right? Some can offer 200K or 250K, but most firms typically stop around 150K. That's why I'm highlighting this one here. And then they'll also offer 50K. I want you to pay attention to this. Every single time I talk to people, and I have been a victim of this myself, they always talk about getting 150K account, 100K account, because it's the face value that those firms typically promote to trader, right? That's what you're being promoted consistently. Get those big account, be 6-figure funded, be 7-figure, because with 7 account of 150K, you can be $1 million funded. And that just all that is a number. But in reality, if you take, right, if you really, really think about it, if you are $1 million funded, right, if you're $1 million funded here, you need 20 account. To be $1 million funded here, you need 7 account, right? So if you have 7 account here, your buffer will be right around $31,500. Hope that makes sense here. So if you're max funded here, not max funded, you have $1 million in funding here. If you take $2,500, which is your drawdown, times 20, this gives you actually right here 50 G's, $50,000. But here you have 20 account, and here you have 7 account. So to get to $1 million as well, if you take the average, let's take the smaller cost, right? Let's take 150 times 7. That will give you about $1,000. And if you take this one and you multiply times 20, obviously it gives us, 50 times 20 times 50. This also gives you about $1,000. Even if you take this number right here and then this number right here, it won't be too far off. So for $1 million, you get more buffer, and it's about the same in terms of price. It's not that far off. It is not that far off, guys. Really want you guys to think about this. It's really not that far off, right? Actually, this is $1,050. I just say about 1,000. It's $1,050 for $1 million in funding here in cost. And mind you, most of the time, if you fail this evaluation, either the evaluation, I believe, if I'm not mistaken, the cost for resetting is typically higher here compared to this one. Now, once you have built a buffer on top of each of these accounts, it doesn't really matter if you're focusing on building a buffer on this account once it's funded, let's say $4,000, and you do the same thing here, $4,000. There are no difference between this account and this account. The only difference is the marketing face value amount that you're being marketed to every single day. There are no difference. That's why I tell people, focus on 50K account. They're cheaper, 3 times less the cost. The target is 3 times less than the bigger account. So you can hit this target much faster, because I'm not going to lie to you, I'm not going to risk more than $500 at any given point on any evaluation. So even on this one, I'm going to be risking about $300 to $500. So it's not that different. Because you're not going to risk $1,000 on this. You barely have any buffer here, no matter how good you are, right? So that's the paradigm I want you guys to be focusing on. I really hope that makes sense. I'm going to let this sit here for a little bit. I really want you guys to think about this. That's the paradigm I want you guys to focus on. That you're being sold every single day the idea that you need to get bigger size account. You need to have $1 million in funding with bigger size account. And the easiest way to do that is to have those big size account. But I'm here to tell you, don't go that route. Go with a route where it's slower and more consistent. It's better to accumulate advantages account, because for your income, if you have 20 account at 50K, that's way more valuable, because if you trade copy all these account funded, you feel so much more comfortable trade copying all these, maybe only risking $150 versus having fewer account here. You might need to risk a little bit higher, maybe to meet the requirement for withdrawal, or just having enough on the account to be able to withdraw this. With 50K, you can get to funding stage. By the way, you can get to funding stage 3 times faster This will take you a longer time to get all those 7 accounts funded. With 3K, I can get there much faster. Much faster. This is 6%. It's not really that hard to hit. When you think about it, it's not that hard to hit. So with that said, guys, I'm going to move on to the next slide that we have here. So here's going to be my proposition for the account management. I want you guys to be focusing on the evaluation stage. If you're going to be managing a 50K account, because this is what we're going to be talking about, the target goal is going to be obviously $3,000, right, for a target, which is 6%. Here's going to be a management protocol. You're going to risk $450 per setup, okay? No more, no less. The max win per day is going to be 2. So if you win 2 trades in a row, you're done, right? You come back the next day. Max loss for the day is going to be $950. Most of these firms, they typically have a stop out of like $1,000 or $1,100. The reason why I'm okay making this number high is because it's cheaper. It's a 50K evaluation. The target is much smaller, so I'm okay incurring a bigger drawdown. And if I do fail it, I'll just reset it and then go back, trying to pass it. But most of the time, if you are following your risk management, you should be able to pass, most evaluation of 50Ks. So if I fail this, if I get to this point, I lose 2 trades in a row, I'm essentially done for the most part. That's what the 950 means. Now, once you pass this and you move on to the next stage, which is called buffer stage for me. So this is when you're going to be in funding stage or in a live stage, right? This is going to be a funding stage. In the funding stage, you cannot withdraw anything yet, right? So the target for the funding stage, you're going to make it a 6% target, the same target that you had earlier. So now you're going to shoot for $3,000 or 6% again. So you're going to do this by risking only $400 per trade. Max win per day is going to be also 2, and your max loss is going to be a little bit lower, $900. So if you lose 2 trades, same thing, you stop for the day. Max loss should be 2 trades. Right? Because if you already lost 2 at $400 and you risk $400 per trade, if you're down $800, you shouldn't be taking any more trade. Don't try to risk $100 on the next trade. It doesn't really matter, right? It don't make any difference. So if you already lost 2, just stop for the day, right? I'm only putting $900 because sometimes you can have you can risk like $400 and then it fluctuates a little bit higher. But I just want to I don't want to be clear. Make sure to follow this protocol, right? So now if you hit this goal in a buffer stage, you get to 3,000. Your payout protocol here is going to be a payout protocol. It's going to be $500. So you're going to pay yourself $500 if you are able to hit this, right? That means that you put $50 towards your evaluation. You pass, you probably pay, give or take, another $150 for activation. And then you just withdrew $500, right? So that means that you got $250 in, and then you got back out $500. So you have 2x your money. And then now you have an account with a buffer of $2,500. With this account, if this is your only account, now you move from buffer stage to what I call earning stage. With the earning stage, your buffer is going to start where? At $2,500. What was your original buffer, right? Before everything started. That's your original buffer, because now you build that. This is like your phase 2. This is where you pay yourself and you pay back the original investment for that evaluation. Okay. And to be honest, if it took you 1 or 2 evaluation to pass, this is kind of like a refund, right? The earning stage, the buffer stage, is just to pay yourself back what you invested. Once you withdraw this, you're going to have $2,500 as a buffer. And then this is when you go into earning stage. In the earning stage, your target is going to be 3%, half of the buffer or any valuation stage you've taken for 50K. The goal is going to be doing $1,500. So $4,000 for your balance, right? $4,000 for your balance. And I kind of made a typo here. It's actually $1,000 here for withdrawal. So once you're in the earning stage, you're going to target 3%, and then you're going to withdraw 2%, right? 2% every single time. So you get to 3%, same thing. The risk setup percentage is $300 per setup. Max win per day is going to be 2. Max loss per day is going to be $700. So if you lose 2 trades in a row here on your funded account, stop, come back the next day. Don't force it. Just stop and come back for the next day. The market's still going to be there. Now, when you build this and you get to $4,000, because you're going to start with $2,500, right? From the buffer stage and that withdrawal that you made for your payout. This is going to be the balance target for you to make the first withdrawal. And now when you withdraw $1,000, you're going to be left with what? $3,000. And then every time, same thing. The next goal is going to be still 3%, well, $1,500, which is going to be putting you at $4,500 for your next withdrawal. You withdraw $1,000 and then you are back to what? $3,500. You want this account to grow over time, and then you conservatively withdraw the same thing. Now, if you're doing this across multitude of account, 5 account, that's 5 Gs, 10 account, that's 10K. And then you are maintaining this buffer growing as well, right? So over time, you want that buffer to build. And then you're building a habit of not withdrawing too much, but you're also leaving enough in your account, right, for future trading, because you want to let money sitting in your account. The reason why I said is because as you are withdrawing, what you're doing with the money that you're getting is getting more 50K account to buffer stage again, to pass this stage and get to buffer stage. Because as time goes by, it's going to get to a point where if you have 20 accounts, this may take some time. This may take a few months, like 4, 5, 6 months, to get maybe to the point where you have 20 account that's in earning stage. It can take easily 6 months, 6 to 8 months, if you're conservatively just gradually building those accounts. And I'm here to tell you the truth. I'm not here to sell you some fake dreams. Some people want to tell you, oh, you can do this in 3 months, 4 months. Come with a mindset that it's going to take you 6 to 8 months minimum to a year to do like 20 account. And then also, mind you, you also got to have the skill set and the psychology master to be able to consistently doing this. So I'm not talking about doing this on a one-off. I'm talking about doing this consistently for a living. So I hope this makes sense. It took some time, but I hope really this makes sense and it hits home. So let me touch upon the last slide that I have here. Ultimately, you want to have a vision. The vision when trading is to accumulate more capital, not to increase the percentage of profit generated every single day. If your focus remains on scaling and you're consistently managing, you will eventually reach million in account under management. My vision, this is my vision, is to continuously scaling the account that I have under management by first passing evaluation and aiming to get as many accounts into buffer stage and evaluations. And then because once I'm through the buffer stage, I'm only thinking of achieving 1 to 2% usually. And that's much easier to accomplish, right? And that gives me also a tremendous amount of focus. So now I know that if I work on getting 3 million under management, and I have been very close to that in the past, but not with a plan that I'm giving you to right now, 1% of that every single month is about 20,000. Even if it's 1% of half of that, that's about $10,000, which is not any sort of money. That's the power of scaling vision, right? You want to think about scaling. Think about what is going to be your power scaling vision. This is my power scaling vision, right? What is your power scaling? And then that's all depending on how much you need to make every single month in terms of your goals and dreams. If your goal is $5,000, you might not even need 7-figure. You may only need like 400,000 or 500,000 with multitudes of account of 50K. That's it. And once you get there, you can simply continuously manage those accounts and build the buffer across all those to be able to withdraw that and eventually build your live account. So everybody has a different scaling vision, right? A power scaling vision. Build a power scaling vision. You can utilize my plan that I've given you to be able to help you navigate and have a North Star on how and what to follow. So it allows you to know exactly where to go, where to fall in, and everything else in between. But ultimately, that is my account and risk management masterclass, right? On scaling and everything else in between. I hope you guys find value in this. Here's my closing remark. Be the black sheep, stand out. Don't follow what everybody else is doing. If everybody else is buying 150K account, 250K account, 300K account, they're trying to look cool, have $1 million in funding, don't follow that. Follow what you believe is the best for you. Only you know what's best for you at the end of the day, right? Be the black sheep. Don't be the white sheep. Like, don't follow everybody else. Everybody else is following because it sounds cool, because it feels right. Because I'm telling you right now, if you follow what feels right, you're always going to end up regretting it. I promise you that. I promise you 1,000%. Have a plan. If you're just taking freaking funded challenge account and you're not having a plan, I don't know what to tell you. You got to know exactly, okay, I need to have a plan on how I'm going to do 10,000. I can't do that with one account. That's not realistic. Now, it's possible, but is it probable? No, I'm just telling you that straight up. That's going to breed scarcity mindset. If anybody that you have heard that have done 20,000 in withdrawal at a time or 10,000 in withdrawal at a time, typically had multiple accounts, at least the one that are very much consistent. Have a plan, and then focus on executing that plan. And I've given you a very, very good plan. And hopefully after this masterclass, I have shifted your paradigm a bit in regards to what should you be focusing on. Only true intentional action bring meaningful changes. I'm going to repeat this again. This is one quote that I told one of the people that I'm helping in training right now. Only true intentional action bring meaningful change. If you're not intentional about the action that you're taking every single day, I'm telling you right now, you are not going to see meaningful change, right? The degree of the intention determine the level of your success, right? The level of your understanding, the degree of your intention determine the level of your understanding in terms of what you're trying to accomplish. So if you are truly intentional about making change, about building an environment, about having an accountability partner, about making sure that you're documenting your trade, you're documenting your journey and everything else in between, I'm sorry to say, but it's going to be a very tough journey. Those are my closing remarks for this masterclass. With that said, guys, in the comment section down below, let me know what you like the most about this presentation. Was this really insightful? Did you find some of this information that I have shared today novel and really useful? If yes, please let me know. I would love to hear that. And if you have not subscribed yet to help the channel, just subscribe. I greatly appreciate your support with the subscribe, like of this video. And last but not least, share with someone else if you found tremendous value. Until next time, guys, I'll see you in the next masterclass. Peace.